Good morning, everybody. So finally, people are agreeing with me. I did a video yesterday on how the home builder market was ready to collapse. And today, I want to share with you some crazy information, some stuff that, like, as a real estate agent, it's just out there doing deals and kind of seeing stuff that's really throwing flags up. And I just got to share this data I saw with you today. And this stuff is right on the money, scary. This stuff really needs to be seen. And if you're out there in the real estate world, you need to know this. The smart guys on Wall Street, the guys that are out there actually writing articles on this stuff, are calling for a 20 to 30% fall in housing prices. And in this video, I'm going to show you how that is going to happen. This is mind-boggling. Like almost 30% declines in home builder inventory and portfolios. It's coming, y'all. It's coming. See, this channel's always been about documenting things I've been doing, seeing, and trying, and everything from, my adventures to my investing. And Moody's, Fitch, and Goldman Sachs came out with some mind-boggling numbers that I even think they're on the low side on this stuff today. So in this video, I'm going to share with you this map right here. See this? This is wild. We're going to talk about these numbers and what the analysts are calling for in the real estate market. This is definitely something that is going to happen. I don't know if they can even stop it now. So I'm going to talk to you about my thoughts, my opinions, the data, and at the end, I'm going to tell you some of the future problems I'm seeing that's about to happen down the road, things that just don't make any sense in the real estate world. And I think there are going to be some future videos that I'm going to come out with because I just can't not talk about this. Stuff's really important. See, we've had some really crazy times in the past, in the 80s, the 90s, 2008, when real estate prices just went upside down. They just capitulated, and we're kind of on the brink of that right now. I want to just jump out there in front of the freight train and say, hey, I told you, if you followed me along on this channel while I was documenting my process through life, you would know I'm trying not to steer you wrong. This is just my opinion. See, the experts out there are calling this to be the second steepest decline in housing market value since the Great Depression. Okay, so I want to take a look at this map right here. This is the heat map of basically the United States and what is the most overvalued property and what is the ones that basically had a very small or maybe a decline in housing price. But what is shocking about this is this map literally almost looks like a flight away from big cities, okay? And I want to really focus on Florida. And it's crazy, the housing prices in Florida, okay? It was like everybody escaped from some of these big states into Florida, and the housing market exploded. A lot of people that I relocated here, from the subscribers from this channel, people that watched from abroad, were able to work from home. So, and that really brings up a lot of factors I'm going to talk about later that could affect if we, could be affected if we see a recession. And since we've seen the explosion of these prices, you cannot evaluate the price of the house for the cash flow it can provide. So as an investor, it just didn't make any sense. Kind of like when a stock price outruns its dividend, I kind of look at it the same way. So this article is saying pretty much Colorado, Florida, Idaho, all these really red hot housing markets are insanely overpriced now. They're actually, and I don't know what real estate agent or realtor or whatever you want to say did these numbers, but they're a financial firm and they got some really smart people, and they're saying that, pretty much everywhere in Florida is between 20 and 50% overpriced. That's wild. There's so many things to factor in here, but check out this article, read for yourself if you don't believe me, but these prices are going to fluctuate to the downside. They just have to. The Fed has messed with the market too much. The government's got involved too much, and people are trying to navigate this, and it's really, really, wild. So the big numbers I want to focus on here is Morgan Stanley's calling for at least a 7% decline in housing prices by the end of 2023. Goldman Sachs is calling for a 5 to 10% fall in home prices in 2023. Fitch is going even further and calling it a 10 to 15% decline in 2023. And Moody's is calling for a 5 to 10% fall in home values in 2023. Now, let's factor in a recession. So the article I'm going to reference, I'm going to put it down in the description box if you want to check it out, is calling for, if we have a recession, Moody's is saying 15 to 20% correction. Now, I'm willing to bet these numbers are on the light side because a recession is usually generically a loss of 3 million jobs nationwide. And it's also going to have to do with a little about what the Fed decides to do, because the Fed is the market maker and crushes everything by raising up interest rates, because the whole point to fight inflation that we're seeing now with really high CPI data is to crush inflation. So they want to make people lose their jobs and bring down the vibrancy of the economy to tame inflation. They are basically trying to take the gas pedal off of everything and just let it all slow down. Remember that these rate rises have yet to even ripple through our economy. They will take months, 6 months, a year to actually, for us to be seeing the other end of that ripple coming back to us. And, builder sentiment is terrible. I mean, it is so bad when you talk to them now that, like, you can just smell it. I did a whole video on that. Check that out. I'll link it down below. And I've thought the entire time that, or when rent rate does not keep up with the price you're paying as an investor, we have this rule of 1%, $100,000 buy, $1,000 rent. Got to have that to kind of make money. Really, it doesn't make you money, but you need better than the 1% rule to get a good return. And since we've seen the explosion of these prices, you cannot evaluate the price of the house for the cash flow it can provide. So as an investor, it just didn't make any sense. Kind of like when a stock price outruns its dividend. I kind of look at it the same way. If the Fed keeps raising and we go into recession because they're forcing a recession and things are getting more expensive, we are going to see at least 15 to 20% decline in housing prices. It was so hard, because we were seeing so many people come here to Florida that we were like, there's no way, we've got a housing shortage here, okay? And then I started thinking about the home builders and red flags started going off. And that's why I made the video yesterday about why I think they're about to collapse. The word on the street is they are hurting, and I don't even think some of them see it coming yet. I don't even think they care. They're just going to declare bankruptcy, move on, and it'll look like China's vacant, cities over there that they built that nobody even lives in, okay? This rounds out my opinion is that they're not taking into account of recession, inflation. When these people migrated here, are the places that they're settling, like Pensacola, can that economy locally handle the layoffs? So if you work remotely and you move to a place that you can work remotely and you get laid off, you are not going to be able to just go out and find another job equal to that in Pensacola or in Crestview or in some of these areas outside these large cities. And so that one really kind of hit me as, interesting. I don't want people to not be able to distinguish between foreclosure and price fall, okay? Because equity and price is one thing and foreclosure is another. If people don't lose their jobs and the economy does kind of chug along and the Fed doesn't crush us with interest rates to the point where it stops everything, you will see properties not change hands at a higher price, but you won't see a mass foreclosure market, right? You won't see a bunch of people just losing their houses. So we got to really make a determination between those two when we're looking at this. The other one is, unless something breaks, okay? In 2008, we had the banks and the bond markets and the mortgage crisis. They all just went kaboom. Something broke. And maybe in this one, if we see a large bank break or builders break or tons of new construction just stopping, and we see some weird event happen. I mean, like right now, between the stuff going on overseas and energy crisis, and we're going to see a change in politics. We're going to see politics change a lot in Florida because so many people came here. You know, we're going to see a lot of these local, you know, areas, these small areas that these people came from the big cities. The politics there are going to change. So what is the political dynamic of the battlefield going to be like, and is that going to change? To add on, would this launch a foreclosure issue? I mean, you got to think, okay, if we have mass layoffs, if we have the price of ownership of the property going sky high, trust me, it will. Inflation is going to make contractors more expensive. It's going to make Lowe's Saturday mornings more expensive. It's going to make insurance more expensive. Don't get me started on Florida insurance. I did a whole video on that. It's about to go sky high. So the fact that Florida is one of the most quote-unquote overpriced properties in the country, now you factor in the cost of ownership of homeowners insurance. Taxes will go up because they bought at a higher price. Make sure you get homestead exemption. The cost of everything is going to go up. Water heaters, roofs, plumbers, floorers, landscapers, everything is going up. HOAs are going up. Trust me. They are going to even try to fight, can you rent the property in the future? For another video, I will talk about that. So keep all that in mind, that this could cause foreclosures. There's a lot of question marks here, and we don't know what the answers are. See, the conclusion of this article is that they believe that home builder activity is going to fall 30%. Okay, that their portfolio is going to fall 10 to 15%. Well, I believe if the activity falls and the buyers fall, and there's a lot of houses on the market, that these home builder portfolios are going to fall 30%. Okay, not we're just going to round this off and say, well, if their traffic's low, they're still going to sell, so it's going to be rough on them. They're going to have a hard day in the sun. Thank you for reaffirming what I had to say in my last videos. I think it's going to be more than that. These dudes are in trouble. They're about to get smoked. 30%. That is wild. I'm glad the smart guys and the big offices are in line with what I got to say. You know, I've been saying this. Or they might have said it first. I don't know. I'm just saying it again. So I want to add here that it depends on how Moody's and Fitch and Goldman Sachs are computing these numbers, and if they're taking these things into account, into their factoring of what they're saying. Here's their little analysis blurb of their disclaimer, but I think they're getting close, and it's interesting to see the media finally embracing that something could be wrong. Will we see any other type of financial crisis be created out of this? I mean, Europe's in trouble. There's a war going on. We don't know what China's going to do. And we don't know if they're going to drag any of us down because all these banks are connected now. It's crazy. But I want to roll into what I see coming next. I think we're going to see a massive bubble in Airbnbs. I'm going to do a whole video on that because people that were purchasing these properties with very low interest rates were overpaying for them for the amount of income they could get. And it's all, I mean, and I'll say this, it's all predicated and connected to a website that is an openly traded company that could go away like that. Same with all the rest of them. Many places are coming in with short-term rental rules and regulations, and even rent control is coming back in and being debated. So I'm gonna do a video on that, and I think I'm gonna do a video on whether maybe you should buy in 2023, because there's a lot of things to factor in if you're going to buy, especially if you're holding it for a long time, you know, and the type of property you're trying to get. Those are you can do 5 videos on that. I hope y'all enjoyed the video. I hope that I made sense, and don't forget to like and subscribe and comment down below what you got to say, because it's open world, open communication, and we all got a lot to learn from each other. And you know, I've enjoyed making these videos, and it's kind of something I do on a daily basis, and I know a lot about because, you know, real estate is hard to navigate if you don't have somebody that knows how to navigate it. So I'll see you guys later.